Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Fisker Automotive, ticker symbol FSR. And here we are looking at the weekly chart, having closed the week at a price of 37.61 cents, being down almost 6% on the day and being down over 22% over the course of the week. So it's been a pretty brutal one, really just bleeding over the course of the past many weeks. And we did actually close the week at the lowest weekly close we have ever seen at a price of 37.61, just above the all-time low of 37.55. So, not looking too good there, but I do think that there could be some more potentially good dip buying opportunities, and I do think that we could be setting ourselves up for a little pump, perhaps in the next couple weeks, maybe a little bit longer than that. And so I do think that any dips that we do see could be great opportunities, but it also could just continue to bleed. So do be cautious of that. But to go over the chart, the daily chart, I'm just going to switch over to that. And so here, as we can see, we did have this pretty big gap down following earnings beginning March, down here with this green candle closing at the all-time low at the time for closes. Closing March 1st at a price of 48.25 cents. And from that, I'm just going to throw up some drawings here that should offer some guidance for us moving forward. And so basically what I've been doing is I have been following the stock along with this downtrending channel. I will take a step back in a second to look at that. I do think that could be a good guide for, when it's good to buy, when it might be good to trim, just to get averages down, whatnot. But yeah, I'll do that in just a minute. I first wanted to go over this Fibonacci retracement going from the low that was hit on March 1st and then going up to the high just the day after, trading day after on March 4th. That was Monday of this past week. And so we do see from this retracement a couple levels that do stand out to me. And also that previous low was at 37.7 cents. And we unfortunately did close the week just below that. So I don't think that looks very good. Not only the daily close being below that, but also the weekly close. So I do suspect we will see further downside. I do have a couple other levels here from prior retracements. One from this yellow retracement, the 1618 at a price of 37.17 cents. So that did serve as kind of a guide for where we might find the bottom here. But since we did run up and pulled back on Monday, March 4th, coming down on that day about 8.5%, exactly 8.5% on that day, and then consolidating here, putting in lower lows. That does make me think that this is a bear flag and that it could be breaking lower. However, this is downtrending consolidation, and so that could quite possibly break to the upside. So there is that to consider, and levels to the upside that I think it might be breaking above if it does go to the upside. One is the 786 from this retracement at a price of 41.79 cents. However, and that does correspond with basically the high of Friday, which was 41.77 cents. So that would be good to close above that, closing above that daily wick high. However, I do think it would be really good to get above the 50% retracement, and that is at 47.25 cents. And the reason for that is because it gets above the highs for the past 4 days. And so I do think that could suggest we'd be breaking out of this downtrending consolidation, breaking up, and then potentially with a move to follow, continuing higher to fill this gap, like going up to around 71.5 cents. Also, another level around the current price is this 2618 from this orange retracement that I have back here from this little run up that we saw. And it does look like that price is right around 37.36 cents. And, I should note that all of these levels, these two extensions, current price is above them. So I do think that is good. However, we did, as I said, close below the previous all-time low. So I don't think that is so great. And I do think price will continue down. And a level that I do think it could continue down from, you might notice right here, there's a little bit of some text just below there. And so if I do take a step back and adjust that y-axis, we can see that the 1618 extension from this Fibonacci retracement is at a price of 25.9 cents. And so I view that as potentially the next level to be accumulating, or to at least average down, because I do think that price will probably break to that level. Hopefully it bounces. Unfortunately, we did not see that with the 1618 from this level, right around 37 cents. But I do think that right around 26 cents, that could be the next bottom. And also, talking about bottoms, I think it's good to take a step back here and look at this downtrending channel, because there's one thing I have not covered on the channel about this, is that, we do have the upper half of that shaded in green or blue, and the bottom half of it shaded in red. And so over the course of this downtrending cycle, if one were to be accumulating shares in the bottom half of it when it's red, one could trim when in the upper half of it, and you could actually be making money as the price does go down. And so looking at the chart here, just adjusting that y-axis again, we can see that the channel does extend to last Friday. If I do extend that over to Friday, March 8th, we can see that we are currently in the upper part of that channel. So while we are at, all-time lows, I actually don't think it's a good time to be buying, because we're not in the red part of that channel. And so I do think that waiting for 25.90 or 26 cents, I do think that could be a better level to be buying or accumulating, and then keeping in mind that weeks down the road, if we do get back up to, let's say, 37 cents or maybe 50 cents, that could actually be a good level to trim the position if that is above the average, if that is above your average. And then so you are better prepared if it does dip back into the red to accumulate more shares, or if it does break out and break above these levels, like 75 cents that I have essentially marked with this purple line at 74.67 cents, having previously been the all-time lowest close here on January 25th. If it does break above that level, if it does get back to $1, you would be well positioned to trim or take profits however you like, or just hold if one is to be accumulating down here in the red. And so, what I have been doing over the past couple weeks, I have been using these Fibonacci levels to inform on my buys. And so I did add a little bit more to my position at 38 cents, but then I decided to wait to see how price would respond after that. And since it has closed the week lower than that, I do suspect that price will go down more. And so my next addition will probably be at 26 cents. However, I should also note that while this does look bearish, it could quite possibly be a fake out, because we only did get one close below this low, and really we need to see two, getting another close not only below 37.61, but also below Friday's low of 37.55. So if Monday does close at 37.55 or lower, that would make me think that is bearish confirmation that price will go down more. But if we do see a green day and we do reclaim 37.70, I do think that could mean that the bottom is in and we will start to see a rally to potentially test the highs that were over here, like right around 56.8 cents, or the high that was on March 1st, which was 58 cents. And if we can get above that, I do think this orange line here at 59.11, that does correspond with the 618 extension from this retracement. And also beyond that, getting back to 71.50, I do think it would be great to fill that gap and start moving higher. But if we do continue lower, do keep in mind that this channel has served as a good guide for dip buying in the red and trimming in the blue. And so, I'm going to try to do that moving forward, be more aggressive down here, and maybe take a little bit off the table when up here, just so I can get that average down if we do dip, as I have accumulated a lot of shares over the past couple months. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.